In America, your salary is rarely the same as the money that reaches your bank account. A paycheck starts as one large number, then moves through federal withholding, Social Security, Medicare, healthcare, and retirement before it becomes take-home pay. For many American women, the pay stub is confusing, not because of a lack of financial care, but because every line is part of a multi-layered system most people were never clearly shown how to navigate. This video is a general educational guide to reading a U.S. paycheck. It is educational content only and is not personal financial, tax, legal, payroll, insurance, retirement, or investment advice. The U.S. pay stub is a financial map detailing exactly how your wealth is distributed across the various channels of the payroll system. The absolute starting point is your gross pay. This is the total amount of money you earned during the pay period before a single penny is touched or taxed. The final destination is your net pay. This is the actual take-home money that clears your bank via direct deposit and is available for daily living. This diagram shows the payroll journey. Financial literacy requires understanding the math occurring in the obscured space between these two numbers. Filling in this grid is the foundational step to taking total control of your personal financial architecture. The first layer of the grid is federal income tax withholding. This is an estimated slice of your income sent to the government, driven heavily by how you filled out your W-4 form. Depending on where you live, you may also see lines for state and local income taxes. These are normal variables based entirely on your geographic location. Next is FICA, a specific, mandatory federal payroll deduction. It splits into two distinct branches. The first branch is Social Security. This takes a flat 6.2% of your gross pay up to an annual limit, funding the National Retirement Safety Net. The second branch is Medicare, which takes 1.45% to fund national health care for seniors. U.S. employers are mandated by law to match your FICA contributions dollar for dollar on the back end, doubling the amount sent to these programs on your behalf. While these mandatory withholdings shrink your gross pay, they are structural legal requirements designed to fund broad public safety nets. Below the mandatory taxes sit the voluntary health and lifestyle protections you select through your employer's benefits package. Most health, dental, and vision premiums fall under a specific tax code known as Section 125, allowing you to pay for them pre-tax. This chart shows exactly how pre-tax deductions work. The cost of your health premium is subtracted from your gross pay before the federal government calculates your income tax percentage. Because the tax rate is applied to a smaller base, your taxable income goes down. Utilizing Section 125 deductions means actively paying less in federal taxes while simultaneously securing your personal health care. Further down the pay stub are the retirement contribution lines. This is where you exercise the most direct financial agency over your earnings. A contribution to a traditional 401k is made pre-tax. Similar to health premiums, this lowers the amount of income you are taxed on today. A Roth 401k contribution operates differently. It is made post-tax, meaning you pay taxes now, but the money grows and can be withdrawn tax-free later. You might also see deductions for health savings accounts, or HSAs, and flexible spending accounts. These are specialized, tax-advantaged tools designed strictly to catch and cover eligible out-of-pocket healthcare expenses as they arise. These specific deductions reduce the immediate direct deposit today, but they are the exact mechanisms used to build long-term wealth and future security. On the far side of your pay stub sits the year-to-date, or YTD column. This column is a running tally. It continuously tracks your gross earnings, taxes paid, and investments made since January 1st. Habitually checking it ensures you're on track, removing the element of surprise when your W-2 is issued. The YTD column is a built-in audit tool, providing a real-time snapshot of your entire financial momentum across the year. Once you understand the layers of the grid, your relationship with the final net K number changes. Because of the mechanics of pre-tax deductions, health premiums, and 401k contributions, a smaller net pay does not inherently mean you are losing money. A smaller take-home check often indicates that you are actively protecting your health, building long-term wealth, and optimizing your tax footprint. The U.S. pay stub is a map of money working for you. With this clarity, you can review your earnings and know exactly where your paycheck goes before it reaches your bank account.